Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Semiconductor Manufacturing International Corporation, interim report. Semiconductor Manufacturing International Corporation market capitalization of $704 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Semiconductor Manufacturing International Corporation holds a significant advantage in their industry. Semiconductor Manufacturing International Corporation trades at a higher price-to-earnings ratio of 132 times and a higher price-to-book ratio of 3 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. The company maintains a moderate leverage profile, with liabilities making up 35% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. Semiconductor Manufacturing International Corporation offers a diverse range of businesses and services. At its core, the company manufactures and sells integrated circuits, wafers, and compound semiconductors in various regions including the United States, China, and Eurasia. In addition to manufacturing, it also engages in trading semiconductor products. The company provides several key services, including semiconductor foundry and technology services. It offers supporting services such as design and IP support, photomask manufacturing, and development and technical services related to integrated circuits. Furthermore, the company provides marketing-related services and private education services. These offerings demonstrate the breadth of Semiconductor Manufacturing International Corporation's capabilities in the semiconductor industry. The stock price of Semiconductor Manufacturing International Corporation, SMIC, has skyrocketed by 125.39% in the past year due to a combination of favorable market conditions and strategic developments. One key factor is China's push for self-reliance and domestic stimulus, driven by ongoing U.S.-China trade tensions and export controls. This national initiative has prioritized domestic chip production, directly benefiting SMIC. Additionally, a recovery in consumer electronics demand and strong financial performance have positively impacted SMIC's revenue and capacity utilization. The company reported robust financial results, including a record annual revenue of USD 8 billion in 2024, with profit increasing by 58.3%. High-capacity utilization rates have also contributed to the surge, with its 12-inch wafer production utilization reaching almost full for several quarters. SMIC's technological advancements and strategic developments have further boosted investor confidence. The company is on track to finalize its 5nm chip development by 2025, which will be utilized by Huawei in its Ascend 910C AI chip. Furthermore, the anticipated trial production of domestic EUV machines in China could lead to reduced production costs and improved yields for SMIC. Government support for the AI sector has also contributed to the surge, with Chinese President Xi Jinping's re-engagement with top tech and AI leaders sparking hopes for renewed government backing. The acquisition of Semiconductor Manufacturing North China, SMNC, by SMIC for $5.8 billion further underscores its commitment to leading China's semiconductor technology sector. Overall, a confluence of favorable market conditions, strategic developments, and government support has driven the remarkable performance of SMIC's stock price in the past year. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, key contributors include an increase in wafer shipments, higher average selling prices, and a shift in product mix towards more profitable products. The introduction of new technologies and products, as well as generative AI driving leading-edge segments, have also contributed to revenue growth. Furthermore, the expansion of customer base through multiple channels and collaborations, along with the recovery of automotive electronics and industrial control markets, have driven revenue growth. Additionally, technological innovation and R&D investments, diversified financing channels, and stable cooperative relationships with major customers have all played a role in driving revenue upwards. On the decline side, factors such as uncertainties brought by U.S. tariff policies and geopolitics, challenges in downstream end markets, technical leakage, and insufficient operating profit or restricted financing have contributed to revenue decline. Supply chain disruptions due to raw material shortages, delays or price increases, fluctuations in macro environment, industry prosperity and customer demand, and impairment of assets due to market changes or increased interest rates have also negatively impacted revenue. Overall, the drivers of revenue growth and decline are complex and influenced by a range of factors, including market trends, technological advancements, and external economic conditions. The net income of a company underwent significant fluctuations over the given period. Initially, it increased by 35.6%, reaching $320,522 due to increases in revenue, cost of sales, and gross profit. However, this trend was short-lived, as net income decreased by 20.4% to $198,646. A closer look at the data reveals that there were instances where net income actually increased, such as a 99.4% rise from $235,777 to $470,103. In terms of profit margins, the company experienced notable improvements. The gross margin rose by 7.6 percentage points, reaching 21.4%. This increase was also reflected in the gross profit margin, which jumped by 89.3%. Furthermore, the EBITDA margin and operating profit margin saw increases, rising to 54.3% and 10.4%, respectively. These changes suggest that the company's profitability improved significantly over the period, despite some fluctuations in net income. The company's financial performance is a positive indicator of its ability to generate cash flow from its core operations. According to the provided summary, the net cash generated from operating activities has been consistently high over the past 6 months. Specifically, for the period ending June 30, 2025, the company reported $909,257 in net cash generated from operating activities. This significant amount of positive operating cash flow is a testament to the company's efficient management and effective operations. The company's debt level and interest expenses have undergone significant changes in recent years. In terms of debt level, the total debt has increased from $10.9 million to $11.9 million, a rise of approximately $1 million. This increase is largely due to a significant jump in short-term bank borrowings, which rose from $148,901 to $1,001,545. The overall debt level also saw a slight increase from $11.6 million to $11.9 million. The company's interest expenses have also seen a notable rise. Despite market interest rate fluctuations, the interest paid has increased by 4.3% from $102,214 to $106,382. Furthermore, the weighted average effective interest rates are expected to increase, which may lead to higher interest expenses in the future. Overall, these changes suggest that the company's debt level and interest expenses have become more substantial over time. Management is emphasizing the importance of investing heavily in research and development, as well as production, to maintain the company's competitive edge. This strategic focus will enable the company to stay ahead in the market. In addition to maintaining its competitive position, management aims to enhance profitability through a multifaceted approach. By optimizing product mix, improving utilization rates, and refining process technologies, the company can increase efficiency and reduce costs. Furthermore, management recognizes the need to manage risk by diversifying financing channels. This proactive measure will help mitigate potential risks and ensure the company's financial stability. Overall, management is committed to a forward-thinking strategy that balances investment in growth with prudent risk management. The company's financial strategy is multifaceted. On one hand, the company has demonstrated a commitment to returning value to its shareholders through dividend payments. This indicates that management is confident in the company's ability to generate consistent cash flows and is willing to share some of this wealth with investors. On the other hand, the company has also engaged in share buybacks, which suggests that management believes the stock is undervalued and presents a buying opportunity. By repurchasing shares, the company can increase earnings per share and boost its stock price, thereby enhancing shareholder value. Concerns about inventory buildup and supply chain disruption are valid based on the extracted summary. On the issue of inventory buildup, there is evidence suggesting that it may be a problem. Page 23 explicitly mentions an indication of inventory buildup, while page 56 shows a significant increase in raw materials and work-in-progress inventory. Furthermore, the risk of supply chain disruption is also a concern. The pages mentioned highlight potential issues such as shortage of supply, delay in delivery, or significant price increases due to geopolitical conflicts, international export controls, and tightening U.S.-China trade policies. These factors can lead to disruptions in the supply chain, affecting businesses' ability to meet customer demands. That concludes the financial summary for Semiconductor Manufacturing International Corporation. Feel free to comment below, and I will be happy to answer them when possible.